Don't fight the Fed, or in today's case, yesterday and today, don't fight FedEx. So markets are down after FedEx came out. The CEO of FedEx did an interview with Jim Cramer and said that recession is definitely imminent, that they are seeing a huge contraction in the global economy, and that they've removed all guidance, and that their logistics had dropped 4% and 7% respectively. Amazon's stock fell 3%. So FedEx, UPS, Amazon are big leading indicators of where the economy is. There's a lot of nervousness out there about the global economy, about how the global economy can affect the U.S. economy now, while the U.S. economy is dealing with its own set of very serious issues. I think that dynamic is what people have woken up to, said Callie Cox, U.S. investment analyst at eToro. The three major averages were on pace to notch in their fourth losing week. The other thing that's going on too is triple witching Friday. So options expiring, things like that. There's a lot going on in the markets today, just kind of compounding this downward pressure. And then of course, the algos get triggered when markets hit certain levels, and the selling just begets more selling, and the triggers and the stop losses are triggered and things like that. So a lot going on out there. And of course, we have the whole Russia-Ukraine thing. If that resolves anytime soon, then markets might get a nice little bounce and breather off that. But markets are going to continue to reprice and to de-leverage as we move into next week with the Federal Reserve Board coming out. They're definitely, at this point, looks like 100% chance of a 75 basis point rate hike. Of course, the markets are splitting that up, saying 70 to 80%, depending on who you talk to, for 75, and then 20 to 30% for 100. And I don't think 100 basis points is likely unless the Fed telegraphs something next week based on some sort of data. Here's another interesting account for you to follow, Michael Kramer of Mott Capital. He also has a YouTube channel. Check him out on Twitter. He's been tracking the S&P 2008-9 financial crisis to the 2022 S&P chart, and it's been uncannily similar, almost identical tick for tick. And you can see where this is leading to in terms of the S&P. Right now, we're hovering around 3,900. This takes it down to about a 3,200 level. And I was here in 2008 and 9. I was paying attention to the markets. I was heavy in real estate when that was going on, had $30-40 million worth of real estate deals that I had developed, and in the process when all the banks were failing. And I'd never done anything in financial markets until the bottom of 2009, when the S&P was about 300 and something. Dow was down to about 3,000. Everybody thought the stock market was just going to die out and all the companies were going bankrupt. And it was just crazy until the Fed jumped in and started juicing the economy and the markets and the Treasury with, toxic asset repurchase program, TARP, and all these different things that they were coming up with to stabilize the markets because all the banks were failing. But that's when I jumped in, was at the bottom for the first time. Never did anything in the markets until the bottom of 2009. So I was there watching this the entire way. And like I talked about in yesterday's video, what the markets have not seen is that real panic capitulation moment. And I'll show you something else that I look at in terms of what to watch for, because there's a lot of people saying that, the bottom is in. May very well be. It looks like the markets are going to test that and test the lows. This is Bitcoin on the hourly here. Now rejecting off of the 2018-2019 high. Yesterday when I did the video, it was finding support. Now it's kind of rejecting. When you go to the weekly, it still has support right there. The interesting thing is when you go to the 200-week moving average, it's not been able to stay above it and get support. It's rejecting off of it. And of course, that continues to rise as we go along with price. So it'll be interesting to see what happens with Bitcoin. There is a lot going on in the markets there with potential downside. And if this 17.8, this 17.8 level gets broken, then it's probably going to go down to that 15.5 level. And there's a liquidity zone down there on FTX right now in the 10.5 to 15,000 range. So market makers are targeting that liquidity zone, looking for some potential downside. So it'll be interesting to see if price makes it and breaks that 17.5 level that we've been following, 17.8, whatever exchange you're looking at. Of course, Michael Saylor apparently bought, rumors are that he bought 500 million worth of Bitcoin with that stock that he issued in this area here, kind of elevating the price, keeping it up. But let's take a look at the major averages here as we have been tracking. The Dow Jones has taken out these previous levels here now, not too far off, couple 2-3% from the bottom, testing those June lows. The NASDAQ has a little further to go, testing that June low, but again, has broken these support levels, has some gap fills down to get after. Same thing on the S&P, a little bit further away from the bottom than the other two indices, and checking those gap fills. But when I say, the capitulation moment, like in March of 2020, the capitulation moment there, and of course, I jumped back in the markets there again. That was a nice little move there. When that was happening, and how do you know where the bottom was? That's when the Fed jumped in, right? So nobody knew where the bottom was till the Fed came out and said, we have unlimited funding. We're going to, as Neil Kashkari said, our financial cannons, we have unlimited ammo to keep firing. So that's when you knew the markets were going to be off to the races. Same thing here. The bottom came in here when the Fed and Treasury came out and started supporting markets. So this was your capitulation moment. Ahead of that, that's when all the banks were failing. I was paying attention heavily in here because it became difficult to get financing on. So I'd already had loans that were pre-approved, permanent takeouts for my construction loans, and it became very difficult to get them done at this point. Some of them wouldn't fund. And then all of a sudden the banks started failing and the banks just shut their doors and weren't lending in this area. So it was a very interesting time frame there. And what we don't know is what we don't know. And nobody knew really. There was a few people on Wall Street calling for a mortgage collapse, but nobody really knew how systemic and widespread it would be. And unfortunately, or fortunately, we were never left to kind of figure out what would happen if the Fed and Treasury didn't jump in. And a lot of people talk about the Great Depression. Let's go ahead and go on a weekly here. A lot of people talk about the Great Depression and the big market collapses, in history that we've seen. And, these big events here where you see what real capitulation looks like when you go back into the history of market collapses at different times in the 70s. Here's a big one right here in 1974. Of course, that happened in September. A lot of these big market collapses, some of them happened in the fall. Of course, the last one was in March. Last two were in March, the pandemic, and then, of course, the great financial crisis. But these are big capitulation moments that you see and in the markets when they do sell off. And we just haven't seen that yet like we have in the past. And even when you go back to the NASDAQ of the .com bust right here, this area here was a big capitulation, but the market kind of was just unloading and working itself down, kind of like we're doing now. We're more on this kind of a trajectory in Bitcoin and other assets like the S&P compared to what we were before. But it's those types of moments that we just, we've got a little bit of action here in the NASDAQ with a few days. So you can see it's kind of somewhat mimicking this 2001. I mean, it looks a lot like it. All of the markets are kind of mimicking. Here's your 2009 financial crisis in the Dow Jones, looking a lot like that right here, the way it just kind of rolls over, S&P. So very interesting times that we're in right now in terms of this action that we're talking about. And here's what I mean by capitulation. So this is the VIX. And when the VIX spikes, that's when you get those big capitulations. There's 2009 right here. This is 2020 right here. And then some of these other bigger areas of these mild sell-offs that we had in between these big ones. And you can see right now, the VIX is nowhere near these levels. When the VIX is low, look out below. That's usually when markets are juiced and peaking. When the VIX is high, it's time to buy. So really, until you get into the 40s in the VIX, you can't really even think, or start talking about real capitulation. The last time we were in that area, obviously, was in June, but it never really quite got quite to 40. A little bit in May, but they never hit that 40 range. So we haven't seen that real panic selling, that real capitulation to kind of really shake out and reset the markets and get a lot of people really just kind of giving up. And, like I said, there's a lot of people calling for the bottom right now to be in and for the markets to kind of hold up right here. And, we just don't know what we don't know in terms of a black swan. Anything could happen. Something could pop up. Markets are really sensitive to any kind of headline risk. If China was to invade Taiwan and that conflict breaks out, if the war in Russia or the war in Ukraine escalates with Russia, they use weapons of mass destruction or something like that. That could really escalate the downside for the markets into an unwinding. If the dollar continues to rise, we haven't taken a look at the dollar. That could put a lot more pressure on the markets. This is on the weekly here. Let's take a look at the daily. The dollar's rebounding a little bit, working its way back up. So is it going to reach that 120 level like a lot of people are calling for? Oil, we're waiting to see what oil is going to do. There's a lot of calls for oil to get back to 120, 130, 150 a barrel, a lot of calls for oil to get back to 60 a barrel. So nobody knows for sure. There is no certainty. You have to take it day by day. You have to watch the markets, watch the headlines, and pay attention to both technicals and fundamentals. But right now, a headline can move the markets like FedEx, right? FedEx comes out and removes guidance, misses their targets, and says that we're seeing a global recession, and we are very globalized. All of the economies of the world are joined at the hip right now. So when those types of things happen, that creates headline risk in the markets, and the markets react abruptly right now, very sensitively, because we're in a bear market. That's how it works. And, it's just the cycle that we're in now. It's the business cycle, right? When you study the business cycle of the markets, you have, expansion, contraction, declination. You have good times, bad times. You have the market cycles, the business cycles of the markets as they go into the peaks and valleys and different time frames. But very interesting times we're in right now. We are coming up on the Fed next week, and what they say and how they say it's going to be very important. And you'll see some of the financial commentators out there are telling the Fed that they've done too much and they don't need to do any more, that they're going to crash the economy. And the Fed is saying, we want to crash the economy. There's going to be pain. Get ready for pain. We have to get inflation down. We're not stopping. And then you have some economists, some analysts, and some financial managers out there that are coming out and saying that we need to do 75 to 100 basis points to get inflation under control, because they know what's going to happen if we don't. Then you have the ones that are talking their book, begging for mercy, saying, don't raise interest rates. You've done too much. And you know who those individuals are in the bond market, in the stock market. That's really interesting to see the different commentary right now. But at the end of the day, inflation will do much more damage overall to the future of growth in the economy than a little bit of devaluing, repricing in the stock markets, financial markets. And what I was going back to was, we have not seen the results of market working themselves out without Fed intervention and Treasury intervention since the Great Depression. The Great Depression, all cards were on the table. There was no intervention. It was fiscal stimulus that was used to try to pull the country out of the Great Depression. I had a discussion the other day about that, whether or not, depression is even possible, real depression like we saw back then. And, in this economic climate, is that even a possibility nowadays with the economy as robust as it is? And we've been through some pretty trying times, and the economy is pretty strong overall and can sustain more intervention by the Fed, more damage by the Fed, and be able to continue. So I'm not so sure a real depression like that is possible. I mean, a lot of things are possible, but without a huge economic event or geopolitical event, it'd be very difficult to do enough damage to the economy to where you'd create serious depressionary environment where there just are no jobs and things like that. So long way away from anything like that. But we've never seen what would happen, where the chips would fall if the Fed did not intervene, the Treasury did not intervene. They jumped in the great financial crisis, 2008-9. They jumped in the bottom of the pandemic, did way too much both times, have never stopped, have never unwound, and have never let that work itself out, let the markets work themselves out. And then, of course, we have the government that's continuing to spend on top of the Fed trying to get inflation under control. So those two are just kind of button heads. And, at the end of the day, from a market standpoint, you cannot fight the Fed in a bull market. You cannot fight the Fed in a bear market. They're the 800-pound gorilla in the room. You will not win. So those are the things I'm looking at. I'll see you on the next video.